Gold prices open higher out of the chute on Monday, ultimately end the day lower, down about $5 at 1825. So got some stronger durable goods, stronger housing data today, but ultimately the market's still forward looking as yields continue to rise and as the dollar remains mixed. Gold waiting for that next catalyst event coming from the Fed. Now recall prior to the June FOMC meeting, gold peaked at around 1878, so it's down about $50 since June FOMC. But ultimately hasn't traded below 1800 since mid-May. It hasn't settled below 1800 since January. So it's been quite a while, spending a lot of our time in between those aforementioned levels since then. But ultimately today, settling down $5, or a little over $5 at around 1825. Now, what does this all mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll notice today that volatility really didn't see a whole lot of movement. We were basically unchanged from Friday's settle, but it has been trending lower since FOMC, since those price declines we've just mentioned. We've also seen volatility moving lower again today, holding steady. So it didn't really see a break in the trend, but didn't see a reversal either. Now, what is that moving forward? We'll look at the positioning. What is speculators doing? Well, speculators after FOMC were adding to their longs. So after we got the 75 basis point rate hike and the expectations for another in July, we saw gold buyers stepping in. Ultimately, gold hasn't seen a major spike in either direction, as speculators have been exiting their longs for the majority of 2022, and have only seen a few weeks where we've had upticks since March, or adding to purchases since March. So it'll be very interesting to see what happens here as we move forward and get closer to that aforementioned July FOMC meeting, where the market is still leaning towards a 75 basis point rate hike. So gold markets open the week moving higher initially, but come back down to earth, settled down at 1825, down about $5 today. Tomorrow we get more data, more Fed speakers, and on Wednesday we get an ECB panel with heads of the BOE, the ECB, and yes, our own Federal Reserve.